back to the channel, traders. For those of you who are new here, my name is Nikolai and this is Tape Reading Concepts. I'm a full-time futures trader with about a decade of experience successfully trading the futures markets. Today I'll show you a textbook example of a pattern-based continuation idea or precedent into repetition setup. As always, we're first going to build up the context and orient ourselves on the field before we look to take any risk. This market is December Crude Oil futures, and it is coming to the downside here in the beginning of the week from recent highs that were left just under $90 per barrel here midweek last week. The Sunday night open found the market weak with selling pressure, which ultimately pushed us by the early morning hours to about $86 per barrel. You can see that there was clear selling interest established right here following the initial impulse leg. The market was trying to stabilize price in the realm of $87 per barrel, but the previous session, a rather low volatility, quiet session from Friday, did leave a low in this realm. It was a porous boundary. You can see that the door was not holding because we had a couple excursions below, and ultimately the selling pressure did result into a new low. Support was much stronger just underneath $86 per barrel, and you can see that this impulse reaction suggests that indeed the market might be either at or close to finding a bottom here around $86 per barrel. Now, the rally was strong and the market did challenge the selling interest established around 87.60 to 87.80. You can see that since price did travel above, it's likely that some of the weaker hands or weak positions, as we think of them, likely did pitch their shorts and in effect turned over the position to stronger hands. There was a robust reaction and of course a good opportunity here to trade at about a 50% pullback into this sell zone, looking for follow through back to the bottom or maybe even fresh lows. This is the earliest you could participate, and of course if you're waiting for more confirmation, there was not a lot of excursion here on the way down as we were pressing towards this local bottom. The market could not gain separation. You can see that there were no consecutive closes or a good amount of distance below the pivot. There was a test and a retest later on at these levels, and the market seemed like it will successfully challenge this area of resistance, but a sharp change in direction, what we call an efficient transfer of energy, promptly led to price eroding all the way back down to support. Here indeed there was robust buying. You can see a test and a retest, but ultimately we did see new lows here in the early afternoon. Now the market did manage to claw its way by the end of the session back above this door here, this potential support around 86. And you can see that there was even, since we did close above the door here, this is the end of the session around 5 p.m. Central Time, or actually 4 p.m. Central Time, that's 5 p.m. Eastern Time, that's my time zone. There was still definitely tangible selling pressure. You can see that as the market was getting again close to a multi-pivot area of resistance, there was tangible selling pressure, but ultimately we closed above the door, and on the right side here early into the Tuesday session we did see the buyers come back in force. Notice the similarity of these behaviors. This leg to the upside is very much similar to what we had from the same price levels earlier in the pre-market or morning hours here just before the opening bell around 9:30, or with the opening bell around 9:30. This time the excursion up towards 87.60, 87.80. This sell zone met no significant resistance, which means that established short interest has likely taken profits somewhere here close to the support or just below the support, where the market is relatively one-sided and there are only profitable short positions in this moment in time. Moving into the Tuesday session, we found very strong follow-through momentum. You can see that the area previously of resistance here is now acting as support within the Tuesday session, where the market establishing a pattern here, an inverse head and shoulders. Many of you are probably familiar with this one. This was a pattern that already had a precedent at the previous low, where we had shoulders on the left side and then shoulders on the right side of this isolated dip here below 85.50. Same price action here, about a couple of dollars higher on the field. Now resistance is becoming support. As you can see that the market dipped below the local pivot, promptly got rallied back above, and then the pullback here confirms the idea by finding a high low or a shoulder and immediate follow through into new highs. Unfortunately, I came to the table on Tuesday rather later in the session, and I did not take advantage of the follow through momentum, which was likely to take us to fresh highs. We were already looking to break here Sunday night highs and challenge the previous ceiling, which was around $90. The Tuesday session here was relatively quiet. About midday here in the lunch hour, we saw a very, I want to attract your attention here to a very particular, very telling piece of tape, which was again the established support. Right here you can see where the market clustered on the pendulum pullback. This is the pendulum pullback, or the expected counter-directional event after covering significant distance on the way up, and there was established buying interest here, and it seemed that the market was clustering both in the prime time between 10 and 10:30 and a little bit later just before the lunch hour. Notice that this level is still a higher low to already established long positions within this market. What happened here during the lunch hour is a break of this level, but the market managed to immediately recover above. There was a quick 50% pullback, which is something that we have already observed here previously. You can see that bottom to top, this is roughly a 50% pullback where the market stabilized, that sweet spot between 50, 61.8%, and then a quick tap of the 50 followed through into new highs. This market showed us something similar. This is once again a 50% pullback on this forced pivot, and then the market followed through back inside here, middle of the swing. What followed through a little bit later is another pendulum pullback, which again found the buyers at yet another higher low, once again 50% back. So it seems that despite the fact that these buyers got taken out of their positions, they actually only turned them over to stronger hands, which were long at better prices, and then only after surrendering these positions or turning them over to the stronger hands, this market is looking to move to higher prices. This is very bullish, especially since the pattern is once again repeating itself at higher lows. You can see shoulders on the left side, the dip that provides this discount opportunity, and then the rally which confirms that buying interest is still robust at these price levels, in this case just around $88 per barrel. So notice that the bottom is migrating from around 85.50 to later high around 87.50 and now around 88 bucks. These are all higher lows. Now, since it is later in this progression, there's already been a lot of ground covered from the creation of the lows going forward. I'm looking to establish in this case a buy zone, since I am interested in follow through. I believe this market will make an attempt on $90 and potentially even a successful one, which suggests that we're not only going to print prices above $90 per barrel, but likely we're going to or the market is going to want to hold on to these prices. I'm connecting here the lows of the pattern going as far back as here, and you can see that if I reflect this frequency to the ceiling where the market exhausted his directional energy, if we move forward here now into the Wednesday session, into today's FOMC session, the market is out overnight in the midnight episode here, just around this level, just short of last week's high, around 89.80, and then this morning there was a significant pendulum pullback, putting to the test this entire demand is in control hypothesis by moving us down here just around 88 or below $88, where previously we found the buyers. Here in the US pre-market after 7 a.m. Eastern time, you can see robust demand, which is very similar to before on a marginally higher low. In this case, roughly matching here, you can see the undershoot at the top and the overshoot at the bottom are roughly the same size. So the frequency is still without any meaningful separation in control. If you were waiting for a little more confirmation, you could see a new high first and then look to buy, but I'm usually in my opportunities relatively early. This is the first viable place to participate. This is again about a 50% pullback. You can see that if we go top to bottom, then this buy zone here is just around 50% on the pullback. Of course, you could ask the market for a better price and try to trade along the frequency, but many times the market will stabilize at 50% and promptly pop up, resulting in you missing the opportunity. Since I was in a live market session, I could not participate. I was teaching, and I missed this chance to get positioned here in the pre-market. However, once our session was done, I was still keeping an eye on this interesting episode. There was an attempt on this level, and of course on the idea of a continuation based on a pattern. So this was really the test for this hypothesis. If the hypothesis holds, I wouldn't mind buying even at a slightly higher price, pursuing a move above $90. There's definitely enough reward to justify the risk for a slightly higher price point. You can see that the market definitely leaned on this level here, attempting the new low, but had a relatively efficient transfer of energy here on the reaction. And then on the pendulum pullback, we see something familiar, which is a sequence of high lows as the demand reestablishes interest here, and prices, especially the ones offered below 88, promptly get soaked up here by the buyers. You can see the deliberate push which takes out the proximal edges, suggesting that indeed there will be aggressive buying, or the likelihood of follow through is significant. I bought the next pullback here, again about a 50% pullback on this impulse move. The confirmation for me here was that the market clustered within the next few bars, suggesting indeed that the bid is migrating from here to higher prices to ultimately what is probably the last chance for me to get positioned here around 88.30, and I literally didn't take any heat here in this trade. My expectation was for a movement back inside the channel. This is a relatively conservative target, still above $90 per barrel. I didn't take any heat here as the market made that move promptly. I did get out with exactly 200 ticks here. It was a measured move that I was going for, shooting to exit safely just in front of the line to guarantee myself the exit. It's also an FOMC Wednesday. The volatility within the equities and other instruments tends to die down as we get close to the 2 p.m. Eastern time zone, and you can see that the energy market here as well is stabilizing. The stop is relatively similar to the one that we have seen previously, where the market gets to the zone in a hurry and then offers us some shoulders here close to a previous high. In this case, I do not have a previous high, but this is a measured move, precedent into repetition, continuation trade. So I'm getting in here without holding the risk further to see whether the market wants to hold on to these prices above $90 per barrel. As is often the case around these round numbers, there is a fluctuation above and below. You can see that right now the coil that is building up here is roughly equally distributed above and below the $90 mark, as there is a combination of profit taking, top calling, me too, in quotations, type of participation late in this progression. I'm not interested in these suboptimal opportunities. If you're looking to understand price action, and if you want to learn to trade the futures markets, you know how to get in touch with me. This is Tape Reading Concepts. My name is Nikolai. I'll catch you in another video.